Hey guys, it's Friday. It's 3 p.m. here in Tallinn, in Estonia, and this is our weekly AMA. So, as I usually do, I'm going to get a sound check first before I start babbling, maybe to myself. So, let me know if you can hear me on Facebook or YouTube, hopefully. We'll see if my technical prowess has proved usable this week. Let's see. Thank you, Stephen. All good on Facebook. And Harold, thank you. All good on YouTube. Okay, cool. So, for those of you that have never actually watched one of these before, first of all, sorry if depending on how it goes today, either you're welcome or sorry. We'll see how it goes. On another note, we usually follow somewhat of a set pattern here. So we start out. We have some news that's been curated over the last week by some of our guys on Reddit, some of our community members. And then we go into some Reddit questions that were curated over the last week as well. Mainly, those are usually all, let's say, CoinMetro specific questions. Then time permitting, and if there's something special to talk about, I do a quick update on all things going on in CoinMetro, and then we run into an Ask Me Anything session on both Facebook and YouTube. Sometimes just YouTube, sometimes just Facebook. But when we can get things right, and I happen to be sitting in the office, it's both. So, seeing that audio is okay, I'm going to jump right in to the news topics. So let's see what we got here this week. So we have 10 news topics, like I said, curated over the last week. First one, Coinbase adds cash withdrawals to PayPal. U.S. company adding PayPal withdrawals. Not sure how newsworthy that is. I guess people that use Coinbase in the U.S. and other parts of the world that actually like PayPal, definitely not one of those people, by the way, enjoy it. The funny thing is that PayPal has a bit of a notorious, well, I say quite a notorious past. I've had many issues with PayPal over the course of the last maybe 10 years or 15, I don't know. Probably 15 at this point, maybe even more than that. They have quite a notorious past when it comes to trading, so like FX sites or other types of sites that accept payments. They blanketly stopped accepting, let's say, FX brokers at some point, like mid to late 2000s. And not late 2000s, but let's say 2005 or so, up until maybe just recently. Mainly because there's the cash, the chargeback risk to a merchant is huge on Facebook, not Facebook, but PayPal. Sorry. So yeah, I guess Coinbase has their 12 days of Christmas thing here, so this was one of their announcements. I think it's good to see PayPal coming more into the forefront, getting a little more comfortable with the business. From a business standpoint, as a business owner, I don't know if I'd actually want to accept PayPal. There are other options. I mean, credit cards directly, ACH deposits in the US, etc., all can be done without PayPal for usually less money. So I'm not 100% sure that I would do that. I do get it from the market share standpoint, but overall it's progress, right? So it's progress for Coinbase, and it's progress for PayPal, and I guess it's progress for an industry as a whole. So. Both being PayPal being one of the biggest players in payments, Coinbase being one of the biggest players in crypto, especially in the U.S. So I guess it's a good marriage on that face. Number two, Seed CX Exchange is barring employees from crypto trading. Yeah, not really surprising. In pretty much every other market, if you work for an equities broker, more than likely you can't trade equities. If you work for any type of underwriter that underwrites IPOs, you can't invest in those IPOs. If you work for, most of the time, an FX broker, you're barred from actually trading FX. Some of this is around insider information laws. Now, the insider information laws haven't been specifically attributed to crypto yet, mainly because, for instance, in Europe, your top crypto coins, so your Bitcoin, Litecoin, Ethereum, Bitcoin Cash, etc., all these assets are not considered financial instruments under MiFID II. And being not classified as a financial instrument basically means that none of the financial instrument laws or regulations apply. And one of those would be the insider trading laws. However, it's a gray line. So if and when, I should say, when insider trade, the first insider trading case is brought against a company in the EU or in the US, I wouldn't say that would generally protect them 100%. So there's still a risk there. So here at CoinMetro, we're also thinking about the same thing. What type of access we can give to employees, what type of access we shouldn't, what they should be allowed to trade, what they shouldn't. When it comes to something like Bitcoin, I don't see a huge, we don't have insider information on Bitcoin, and nothing that someone could gain from the information that we will have, regardless of our size, will really give them any insight into where Bitcoin is headed. And most of that information is public anyway, because if you're pulling order book information, anybody can pull that if they wanted to. So that would mean that even a client would be able to gain what would be considered their insider information. So, but from a risk mitigation perspective, it makes 100%. It makes sense, because at some point these laws and these rules are going to apply to crypto dealers, exchanges, or whatever name they have at that point, when the laws are applicable to their business. Number 3 out of 10, BTI claims only 2 out of the top 25 crypto exchanges accurately report volume. I have no idea who BTI is. I did read part of this. Between my laughs, giggles, chuckles, and rolling on the floor, I read through as much as I possibly could take. Let me see, BTI. I'm just trying to see. Is this country reports Bertelsmann's Siftung Transformation Index? I'm doubting that's what it is. The Blockchain Transparency Institute. Yeah, that's probably what it is, right? Because obviously when I think of reputable institutions around the world, the Blockchain Transparency Institute obviously is in that list. Yeah, that was sarcasm, by the way, if anybody didn't catch that. Yeah, I read through most of this. Yeah, I hate to say it, but I think somebody may have paid for this report or funded it. The report gives absolutely no insight on how they got this data, how they actually parsed it, how they actually looked at it, how they actually determined what wash trading is and isn't, how they actually determined the percentages. It gave literally no information. It's just a bunch of numbers. Literally, it's like somebody was just digging around somewhere and was pulling numbers out of thin air and made 2 companies look rather nice, and everybody else looked like shit. So yeah, I'm not saying it's biased, because maybe it isn't. But if I was a betting man, I would probably say there's probably more bias in there than not. Yeah, I think, again, if this was, I don't know, some reputable market institution that actually deals with big data outside of the blockchain space, that's a well-funded institution that wouldn't need to actually be biased, then maybe I'd look at it in a bit of a different light. But this is an institution I've never heard of. I have no idea what their funding looks like. I have no idea who's behind this institution, this BTI, and it just kind of reeks of bullshit, basically. I mean, bullshit has a stench that's kind of hard to miss, and this stinks. So number 4, Robinhood is making millions selling users' data to financial companies. Ding, ding, ding. So is everybody else. So I know everybody's caught up in this "my data's worth a lot of money because I'm awesome" phase of every kind of generation has like their hook that they like hook into that makes them think they're better than everybody else. And I think this generation right now is like their data. I'm not saying data is not important, and it is, and it should be protected. But people have been making money off of data since, I don't know, ever. This is nothing new, and they will still continue to make money off of data because that's where the money is. Facebook, Google, Instagram, all these companies that everybody uses to share, the pictures of the food they're about to eat and the vacation they went on and the cute little dog they saw in the park, all share information and all make money off it. They monetize that information. So, Robinhood, who famously charges no commission, which is already a bit of horseshit, because obviously no company has a business model where they make no money. They wouldn't be a company then, they'd be a non-for-profit. I'm pretty sure Robinhood is not non-for-profit. So that means they're making money on spread, they're inflating spread, they're making money somewhere. They're making fees somewhere. But data there's a lot of money in data. I mean, anyway, they probably make a lion's share of the revenue on data. And I don't think that's going to change. That's just the way things work. And unfortunately, in order to change that model, you won't have commission-free trades on Robinhood anymore, guaranteed, if you don't allow them to sell your data. So that's your choice, I guess. Maybe they should give you the choice, sell my data or charge me, I don't know, 0.005% on all my trades. And we'll see what people pick. Number 5 out of 10, pros are ditching the Bitcoin market, JP Morgan says. Well, this is the same JP Morgan, by the way, that said Bitcoin was a hoax, a Ponzi scheme, a pyramid scheme, it was a bubble, nothing ever was going to happen, it was a joke, there was no value, blah, blah, blah. And then right around, the capitulation of the bubble, I think Jamie Dimon was somewhere on TV saying his daughter had bought Bitcoin and now he thought it was okay. And now, his moniker is right back to saying that pros are ditching Bitcoin. There weren't that many pros in Bitcoin anyway. So are there some pros ditching Bitcoin? I'm sure, because they made a bad call and they lost a lot of money. Or they had clients that pushed them into Bitcoin because their clients, saw Bitcoin going up and said, get me into some of this. So they put some money in some ETNs or ETPs or ET whatever, or they just bought physical Bitcoin. That's kind of a misnomer, but whatever. They bought Bitcoin and it tanked. And now their clients are like, you're an idiot. Why'd you put me in this? Why'd you let me put my money in this? You're supposed to be my advisor. And then, the pros start ditching because, whatever. There's no money to be made. Plus, the volatility's down. So even somebody that is an actual trader, look, volatility is great for a trader. Nobody wants to trade a flat market. There's nothing to trade. So on that side, volatility is a good thing. So from a trading perspective, yeah, I mean, it makes sense. So what? I'm sure there's pros today that are ditching gold. There's pros today that are ditching commodities, derivatives, asset-backed securities. Remember those guys? Remember asset-backed securities when everybody packaged all these toxic mortgages that they knew nobody was going to be able to pay off and then sold them to countries and institutional investors because they knew it was just going to blow up? You remember that? Yeah, you know how many pros stopped dealing in asset-backed securities after they got completely screwed in 2008? Yeah, lots of them. So, who cares is basically the point on that one. There will be players that come in and out of every market because they either get screwed, don't know what they're doing, or whatever, or they make their money and they move on to another market, or the market kind of quiets down and they move on to a more volatile market, or whatever. So the fact that pros may be ditching Bitcoin, yeah, the hashtag there is who gives a shit, basically. Number 6, Bitcoin, a pyramid scheme, says CFA Institute. This one's awesome. One, I'd like to see the data that they amassed to estimate that it's a pyramid scheme. Obviously, in a pyramid scheme, let me see if I can do an upside down pyramid here. Like this, right? So this is probably the symbol for something else. Somebody's going to send me an email about this one. But from a pyramid, you have the people on the bottom. Everybody sits either on the top or the bottom. Depending on this pyramid, I guess you can do a pyramid like this too, right? So you have all your investors coming in at the bottom, and somebody at the top makes all the money. So who is that? Can we look at all these transparent blockchain transactions and figure out where they're all being funneled so I can find out who the owner of the pyramid is? That'd be really great because I'm pretty sure nobody knows who the owner of the initial Satoshi is in Bitcoin. So that would probably help. So if the CFA Institute has a paper that they wrote up about how this is a pyramid scheme, I'd like to really read it because basically it would tell me who's at the top of the pyramid, and that would be awesome. I think what they're trying to say is it's a scam. And for some reason, they thought saying pyramid scheme would be the best way to describe it. They should have just went all out and called it a Ponzi scheme, so they look even stupider. That probably would have, garnered some headlines too. At the end of the day, you want to know what really is a pyramid scheme? Let's see. Let's name the real pyramid schemes. Insurance, the insurance business, fucking pyramid scheme, 100%. Let's say Social Security in pretty much every country that provides it, pyramid scheme. Pension funds in many countries, pyramid schemes. So, I mean, if you want to bring it out, finance is built on a whole lot of pyramids. This, I guess, at the end of the day, could prove to be one of them. But what does that make it different from anything else? But it's not a pyramid scheme. It can be labeled many things, but I think a pyramid scheme is probably one of the most inaccurate descriptions that you could possibly throw at it. Number 7 on a list of 10, eToro's survey, investors want to trade cryptocurrencies but can't find educational resources. Makes sense? That's why we are dipping our toes into education. At the end of the day, The same thing happens. The same thing happened in FX. Initially, when FX became prolific, I don't know, well, became accessible to the retail public, which is 98, 99, there was nowhere to teach you how to trade. Demo accounts really weren't even all that fashionable. So nobody really penetrated the market. They tried, they lost, they didn't know what to do, and they left. Now every broker and their grandmother have some type of educational course. Do people now make a lot of money in retail FX? Nope. Education's great. Unfortunately, most people don't listen. But they're right. Most people want at least a base knowledge before they jump into something, right? Or they lose a bunch of money and go, maybe I should read something. And there's nothing to read. But that comes with time, right? So I think, you're seeing some other companies, and Binance has their educational resources now. eToro more than likely has. I haven't really checked. But yeah, education is all part of the package. You need to get people in education. But you know how you also get people in? Is you underpin the technology under something they already use. And that's it. Lots of people use eToro's social trading. So I'm sure they already have crypto assets on that social trading. So that's going to push mass adoption, at least through their platform. Same thing like we're doing with SEPA transfers and IBAN accounts and all this good stuff. All that stuff is going to help push mass adoption. Speaking of that, I saw a really stupid tweet about I think it was Tim Draper invested in some company that wants to get Lightning Network payments in Starbucks. Because the last time I was in Starbucks buying a coffee for my wife, because I only go in there when someone makes me because I hate it, and I hate everybody in Starbucks actually. So just so you know, when I walk in there, literally the hatred brews up like to the top of my head. That's why I lost all my hair. It's just Starbucks hatred. Anyway, so when I walk in there, the first thing I think is, man, you know what? If there was one additional payment method that I could use in this place right now, that uses a volatile asset that could be worth 10 or 15% more or less by the time I pay for my $9 coffee that was picked by some 9-year-old Ethiopian kid, that would make this great because, they don't have enough payment options at Starbucks. Anyway, I'm going to move on. A little rant over. Number 8 on the list of 10, pro-Bitcoin Ron Paul. Ron Paul. Okay. It's time to abolish the Federal Reserve, embrace tax-free crypto. I'll tell you something about Ron Paul if you don't know anything about U.S. politics. A guy tried to run for president 2 or 3 times, failed miserably every time. Some of the things he talks about make a bit of sense. He's obviously an ultra-libertarian, which is great. You can't really be too far right or too far left and kind of make it. Nowadays everybody goes so far right or left that they even when they come back and say, I'll give up a little bit, they still don't even get anywhere near the middle, right? It's not like it used to be. But Ron Paul's never going to win an election in his life. It's just not going to happen. There's not enough people in the U.S. to vote for Ron Paul. Abolish the Federal Reserve. Look, I've said this a bunch of times. We had a regulatory kind of panel discussion here in the office the other day. That really shitty YouTube video that's too dark to watch. I mean, the audio's there, so whatever. Put it on like a podcast, and like when you can't fall asleep at like 2 a.m. on a Tuesday, throw that shit on. You'll fall asleep, guaranteed. But the main point there is that, I'm pro-regulation. That doesn't necessarily mean I believe that we should have the regulation we have. But we do have it. I'm a realist, right? It exists. You don't follow it, you go to jail. I don't really feel like going to jail. I actually have a hat that I'm going to wear at some point during this. Somebody told me I needed to wear a hat. I thought it was going to be a Santa hat. It's not. It's not a Santa hat. But it's a hat, and I'm going to put it on at some point. I just haven't found. This might be the right topic right now. Maybe not. So anyway, the Federal Reserve. The worst case, the worst in the entire world, obviously, is Switzerland, right? It's a privately held federal state like bank, basically, right? So. They have shareholders, private shareholders, and the biggest shareholder is like a German private citizen. That is just ridiculous. But let's get back to Federal Reserve. Federal Reserve is a ridiculous organization, right? And probably should be abolished, but it won't be, at least not right now. Many people want to see this utopian, the Bitcoin white paper come to life, right? The true Bitcoin white paper, and it's possible, but it's not possible if you try to throw it in somebody's face now. They'll just throw it out. But if you get regulators to embrace pieces of this, then you show them why a trustless system works. Then you show the public why the trustless system works, and you actually do test that system, not 10 years of a bullshit size market that is super volatile. No, really show them why this is the way forward, and that's going to take a lot of time. But when that happens, then you have the opportunity to actually get to where the Bitcoin white paper initially wanted to get. But if you try to do that first, it's just not going to happen. That's just how the world works. So I agree with Ron Paul. Well, I don't agree it's the time to abolish. I think the time to abolish is in the future. I would love it to happen now, but realistically speaking, it won't. Number 9, Bitcoin. The decline is fundamental, unsolvable, and the end of BTC. Let's see who said this one, because this is always interesting. It's going to be like, let's see. So written by a guy named Anthony Garcia. I know a few Anthony Garcias. Wonder if this is one of them. So this is just a guy's opinion, basically. And the one of the top comments says, laugh out loud. So obviously Bitcoin Maximus. So the decline in Bitcoin is fundamental, unsolvable, and the end of BTC. Well, I don't know what arguments he throws up, and I don't really feel like reading this, to be honest. But here we go. No intrinsic value. Because the US dollar and the euro have intrinsic value. Yeah. I think somebody should define intrinsic value for all these guys that use it as an argument. And of any sort of intrinsic value or any sort backing it. So wait a minute, hold on. So what backs the US dollar, the euro, the pound, and what backs those? Oh yeah, the US dollar is backed by the military. Yeah, the military, the intrinsic military, right? Come on, guys. We went off the gold standard back in 1971. Everybody, all the gold bugs always talk about that, how we ruin the world. But the world has grown by leaps and bounds since 1971. It's actually grown much better than it grew, let's say, after World War II into 1971. You know why? Because we've had the ability to actually deal with a monetary system that's flexible and not backed by fucking gold. And I understand that people get all crazy about that, but intrinsic value is kind of horseshit. It all comes down to, to be honest, SOPs, operating procedures inside the Federal Reserve, inside the government, inside the central banks. If they do their job correctly, they can do their job quite well. If they don't, well, then they don't. But backing the dollar or backing the euro or backing anything by gold doesn't change that in any way, shape, or form. What it does, the only thing it really governs against, I guess, is, if we have all-out nuclear winter and you can this piece of paper is backed by some gold, and some guy goes, well, I got tuna-fishing guns, shoots you in the face and takes your gold. So, I'm not really sure how that really works out either. All right, number 10 on a Western. I guess my point on number 9, by the way, is that Bitcoin may not be here in 10 years. It's a possibility. Anybody that tells you it's not a possibility is just drinking too much of the Kool-Aid. Do I think it'll be here? I think it has the biggest chance out of any current crypto asset that exists on the market to still exist in 10 years. It's got first mover advantage, and it controls the liquidity. And if you think that crypto assets and tokenized assets aren't going to be here, then you're a moron. Because there's way too many things that basically current financial, enterprises can benefit from. And there's 3 major ones, and that's negotiability, transferability, and liquidity. And if you ask any market whether they want those things and they tell you no, they're lying. Number 10, Western Union to adopt the use of cryptocurrency. Yeah, well, they've been testing Ripple and things like that for quite some time. The tokenization to be able to move funds faster for less money, so that Western Union can screw everybody with their exchange rates that they've had multiple lawsuits against over the years. They'll do it, and this will save them money, allow them to reduce the amount of employees, allow them to reduce the amount of oversight, allow them to reduce the amount of mistakes, and they'll be able to make more money. What, are you kidding me? Obviously, they're going to do it. Just like everybody else, they're waiting for the specific time to do it, which is probably regulatory related. But when that happens, they do it. Obviously, they do it. It would make no sense for them not to. Moving on to Reddit questions. So we have, let's see how many we have. Not that many this week. 8 people posted questions. There's probably about 12 questions overall. So let's jump right in. So we have Biordo94. First of all, sorry for the long write-up. Much like you, I'm unable to keep it short. Haha. All right, touche. I have a hard time doing that. Somebody asked me yesterday for a 1-minute elevator pitch. It lasted 12 minutes. So just, I'm quite upset with the deposit withdrawal fee structure. Could you talk a bit about that? Sure. I'm not sure exactly what specifically you're talking. I'm going to read the rest of your questions. Maybe it's in there first, and then I'll get back to it. I seem to remember you saying that CoinMetro would only pass on its cost to clients. The CoinMetro would be making money on deposits and withdrawals. Bitcoin withdrawals seem to cost 0.15. That's correct. We use BitGo. BitGo charges us 0.15. So there you go. This is strange. It looks like fees a bank would charge, and frankly goes against everything Bitcoin stands for. Bitcoin has a mining fee. That fee is the same. Okay, so you're complaining a bit about that. So yeah, it's about Bitco. We are charged 0.15 by Bitco. We charge 0.15. At one point, we will move off Bitco. When we do that, fees will go to whatever the mining fees are, basically. So we're not making money there. It just so happens that as we were launching the products, we're using a service provider, which we did because we didn't want to have to worry about creating a secure wallet infrastructure as our first step. So that's why we chose Bitco. So that's why the 0.15. Euro SEPA and withdrawals seem to cost $1. Well, this doesn't look like a lot. It is a lot in comparison with Kraken, which doesn't charge anything for deposits, 9 cents. Yeah, they charge 9 cents because they do a lot of volume, and basically whoever's processing their movements probably charges them 9 cents. Right now, we're not charged 9 cents. So we're charged a little less than €1, but at the end of the day here, there is an administrative cost there, and it's quite high. So that's why it's €1. Now, our goal, and I think I've said this before, is kind of like Amazon's goal. Our goal is to grow to charge less, not to grow to charge more. So those fees will fall over time. I don't expect them to go higher. I expect them to go lower. But when you start out and you have, zero as when you go to a payment processor or a bank and say, hey, look, by the way, our bank charges us a fixed fee per month, which is quite high. And that's also why there's a small jump in that fee. Once we're able to cover that fee by the amount of withdrawals that are going in and out and our own commissions, then that'll also get lowered. So yeah, that's the question. So you have two questions. Is CoinMetro's bank partner any more expensive than Kraken's banking partner? Yes. And what's the logic behind the $1? Okay, so I already gave you that. Because it would prevent people from bringing euros to the platform. I don't think it prevents anything. Look, I'd like to charge 9 cents, and at some point, I hope to charge nothing. And I think we're going to get there. How long it takes depends on the amount of volumes that we have. But €1 is not going to limit anybody. Unless you're planning on depositing €2, which at that point, to onboard you through KYC is going to cost me 3 times as much as your deposit. So, whatever. It makes no sense for me to even onboard you at that point. I understand that CoinMetro needs to make money, but I would like to understand as a CoinMetro stranger, I would use myself. So again, we're not making money here. It's the same. We haven't gone off that path. I said that in the beginning, and I'll continue to say that. It's not about making money. It's about covering our own costs. So our costs initially are going to be higher than they will be. Look, Kraken has lower costs. Kraken does more volume. Kraken's been around longer. Once we get to the point, and it won't take as long as Kraken did to lower those fees, but once we get to the point where we can, we will lower them for sure. Also, you should have a page listing all fees of the exchange, withdrawal fees, deposit fees, trading fees, and how much discounts you get for holding certain amounts of XCM. Yep, that's coming. Actually, all the fees I think are already there. To be quite honest, the discounts you get are not there yet because we haven't actually got XCM into the infrastructure yet, or the ecosystem. Once it's there, then that'll also be included. But good point. Thanks for bringing it up. Number 2, international mix. Sorry, hey Kevin, great to see the site going live. Congratulations to you and the team. I know it's really just the journey, but an important milestone. Do we know how long crypto withdrawals take from cold storage? Is it automated or manual? So it's semi-automated, and those withdrawals, depending on, so obviously it's multi-signature. We have people from all over the world. So maximum, I would say it can take, on worst case scenario, probably about 8 hours. But generally speaking, we're going to try to keep it below that, probably 1 to 4 hours, 1 to 5 hours, somewhere around that. But the goal there is to make sure that our hot and warm wallets have just enough to cover the influx of withdrawals. So over time, we're going to understand how much we need to have in hot wallets. I don't want to hold more than like 0.25, 0.5% of the overall AUM in hot wallets. Warm wallets a bit more. I think over time, we will understand how much we actually need to hold. What's the maximum we need to hold? We're going to have multiple hot wallets. Our hot wallets are still semi-secured because the hot wallets don't necessarily need to allow transactions out to any address. We can put policies on those hot wallets. We can limit the amount per hot wallet. This way, somebody would actually have to hack into multiple even hot wallets just to be able to garner even up to 0.25% of our AUM. So, is it true that credit and debit purchases outside the EU equate to 5%? If so, that's higher than Coinbase. Do you think? Yeah, it's about volumes, guys. So as soon as those volumes go up, we will become, in the EU, we beat Coinbase. Outside the EU, we don't. And that's mainly because we're an EU business. We get better rates inside the EU. Over time, though, as they start to see our payment flow outside of the EU, they will lower our rates, and we'll lower our rates to you. It's easy as that. Matt's a boss. What's up with the trade view? The volume and trade history is from a different exchange. Why is there so little liquidity? When will this change? Well, the volumes you're seeing are from where we're pulling liquidity, basically. Why is there so little liquidity? Because we have to test in phases. So we brought in Bitcoin Euro liquidity, we brought in top of book. There's actually much more liquidity outside of the top of book. So market orders can still fill beyond what you see there as liquidity. But it has to come hand in hand. As deposits start to roll in, we will amplify the amount of liquidity we show, and then we will add in additional pairs. So when will this change? It'll change over time. It'll change over time as we start to bring in clients and as we start to display more pairs. Crisp 808, are Americans going to be stuck in KYC purgatory for the next few weeks? No. So get your documents in order, follow the instructions, get them up, they'll be approved, and you're off to the races. Number 5, Jarvie Pratt. I have a question about upcoming regulations. I recently got banned from another crypto exchange due to living in a country, the Bahamas, that's on the FAFT high-risk monitor list. I've also read that the FAFT will come out with a global crypto exchange regulation in June 2019. Let's say CoinMetro suddenly decides my country cannot use its services due to new regulations. When would I be given a warning notification via email, any time period, as trade my XCM and route my funds? I'm asking this because the other exchange I mentioned suddenly IP banned my entire region with no warning. So each jurisdiction usually has a specific guidelines for how this needs to be done, and I'm pretty sure doing it with no warning is probably illegal. I don't know the specific regulations in the Bahamas as per the time that we need to give notification. Considering the fact if you held our token and we're the only place that you can actually have secondary market access to sell that token, we would have to give you some amount of time. Again, it would all depend on the specific laws of your jurisdiction, the Bahamas. So as far as FAFT goes, we do look at FAFT, though we do look at many other factors. So if you're a low-risk client that happens to reside in something that FAFT says is high risk, but maybe you do your banking outside of that country, you're not banking from inside of the Bahamas, more than likely we would look at that a bit differently. It's a different story if you're already a high-risk client banking in a high-risk nation and the thing goes on FAFT monitoring. Then that's a different story. But it's a case-by-case basis. There's no such... The only real blanket countries that you just don't accept the country, period. That is, for legal entities, this is different because a legal entity is different than an individual in that aspect, but we're talking about Iran and North Korea. Outside of that, it's all based on internal risk policies. So when a company just decides to blanket ban the Bahamas, it's not because they were forced to, it's because of their internal risk policies. Diligent Techie number 6. Hi Kevin, congrats on the launch. It looks great. When are we likely to see more pairs? So as soon as we get through, let's say, the bugs and things that are currently happening now, or have happened, or actually most of the things we're working on now are around streamlining a bit KYC, and I think we're working on some very small, kind of gooey, kind of buggy things that are seen by a few people. Once we get through that, we will start to add in additional liquidity. We have multiple liquidity partners. We only have one currently pushed onto the platform, mainly because we just we want to do this over time. So by the end of the year, I would hope to have at least another couple pairs. And first, second week of January, once everybody's back from work, I want to have at least the top 5 that we expected to have right around day 1. So may happen before that. It really just depends on the influx of clients, the influx of volumes, because more volumes let us test more. What's the mood in the team? Is everyone excited? Yeah, we did celebrate, and yeah, everybody's excited. Everybody's glad to get past that first hump. I mean, while it's not, while there's still a lot more to do, it's a memorable one. It's kind of like everybody shares that first like dollar or euro that they receive when they open like a store or something. So this was kind of it for us. So yeah, everybody's happy and happy we got over the speed bump and ready to push forward. What do you make of the recent market rally? Do you think it will be sustained? No, it won't be sustained at all. Will it flop in January? I'm not going to look at a chart and make a market prediction, but this is a bounce. This is a small bounce compared to the amount of bearish pressure, and I don't see this small bounce with its current speed being able to overtake the amount of bears that still exist in the market. What are you doing for Christmas? Good question. Not sure yet, actually. So, actually, my family flew out to see, 2 of my daughters and my wife flew out to see my other daughter, and they're hanging out there over the weekend. They're coming back on the 24th, and then we'll probably spend Christmas at home. I'll be working a bit, and then, I don't know. I don't think there'll be any travel involved. We'll see, though. Merry Christmas from the Techie family. Appreciate it. Merry Christmas to you guys, too. Number 7, Lazy Jones. Have you submitted to be listed on CoinMarketCap? Not yet. Not a priority at all at this point. We're going to provide our own transparency stats, so you'll be able to see pretty much everything you see on CoinMarketCap right with us. We're the only real game in town to be able to trade our own token So they're not going to have any information that we can't get, because that information is going to come from us solely for the most part. Robin Timmerman, the concept of funding crypto startups via ICA is waning. ICO, sorry. What do you think the next big thing will be in 2019? What changes do you have for the ICO Express? So the ICO Express was always a tokenization platform. We called it the ICO Express because that was kind of the only game in town when it came to use cases, right? But it's really about tokenizing anything, hard assets. It's about, you can tokenize a portfolio, you can tokenize a property, you can tokenize your jewelry, you can tokenize anything. So I think the name over time is probably going to change. ICO Express might not be the name that we use when we launch it. We'll see. I do think ICOs in general, initial coin offerings, will still exist. The acronym somehow is tied to the bullshit and the fraud that has happened up to this point, and it shouldn't be, because it's still a viable way to raise specific amounts of capital. So STO, which I hate, it's tokenized security. It's not a security token, but there's going to be different acronyms, and I think at some point you will see regulation that basically looks at a generalized ICO regulatory framework, and inside that regulatory framework there are licensable and non-licensable. Just like you have, securities and securities exemptions, you will have ICO and ICO exemptions. So an ICO that can get an exemption doesn't necessarily need to do anything that they wouldn't have to do now. One that can't get an exemption is going to have to go through some type of framework and issue some type of more standardized, let's say, security that just happens to be tokenized. So I don't think this is going to end. We will get to a point where we'll democratize a bit the fundraising. Even though these things will become a tool set. There's been a funding gap between about 2 and 8 million in Europe, and I'd say 1 to 10 million worldwide, where it's really hard to raise that type of capital. There aren't many platforms, there aren't many avenues to be able to do that, and the ICO is the perfect avenue. And I think big players understand that and see that. This first kind of nonsense we've seen with lots of fraud and lots of big raises, but companies that have done nothing, is the same thing we saw with the internet bubble. That's the closest thing you could put it to. So the internet still exists. People now use it. It has perforated every part of our lives, and partially blockchain is going to be doing the same thing. So as a protocol. So it's not going anywhere. It just needs time to basically mature and find some type of real legal ground that it can stand on. What happened to your old invalid KYC? What happened to our old invalid KYC data? Through the digital shredder or sold to the black helicopter people? Neither, actually. So that data is still on tap with us. Problem is that most of that data did not conform with the data that we need to collect under EU law and the new changes that were because of EU law at our banking partner. So some of it was quality related, some of it had to do with the type of documents that were received, some of it had to do simply with the dating of the documents and the fact that the go live date, the fact that those documents were collected for a Hong Kong token issuer and then basically shared, GDPR compliantly shared with an Estonian regulated company who went live on a specific date according to licensing, and at that time the documents were out of date. So there was a lot of things that, and we tried to kind of negotiate for months and months and months to not have to redo the KYC, but unfortunately, to stay compliant, we did. So we still have all the data. The data hasn't left us. That data will be on tap with us according to Hong Kong law, because that's the initial receiver of that data, which I believe is 7 years. 7 years once you're no longer a client. So that could be forever. We'll see. Hopefully, it's forever. All right, guys. So I see a few questions that popped up here. Let's see. Gerardo, this is on Facebook. I saw the current fees for CM. I heard the fees will change once XCM is minted. So what are the fees going to look like then? No, fees necessarily won't change when XCM is minted. They will go down over time as we start to get more volumes and we're given better fees by our providers. So that'll definitely happen. Cameron, also on Facebook, congrats on the launch, Kevin. Support has been great. Had an issue with KYC, my fault, and the team were really efficient. Cool, glad to hear it. Look, we really do have a great team, guys. But understand that we still need to scale this team, and we're still building out the team, and the team will be built out for quite some time. So it's great to hear things like that, and I hear many more of those on a daily basis. Obviously, though, there are some pitfalls every now and again, but it's great to get some good feedback. I appreciate it. From YouTube, Intermillion, can you compare your launch to Binance's launch? What do you Why do you need volume to mint? Well, Binance, I don't know the specifics of Binance's launch. I know more or less the time frame in which it happened. It happened in a much different market, and there was a lot of wash trading going on. It's something that I will not do. So what that means is that in order for us to try and protect, yeah, it could be, it's short term. It definitely is short term, but a short term catalyst in a bear market can lead to a recovery that takes much longer than expected, right? So I want to be able to mitigate that to the best of my ability. Also, I want to make sure that the tech is fully functional. It's actually quite a complex piece of tech that we use to be able to convert all these fees into XCM. Plus, that means we're going to hold XCM and not let's say Bitcoin, Litecoin, and all these other coins and tokens, which means that we have to put into place our own kind of market making on the XCM side to be able to cash out of XCM as needed. So all this has to be done in time, and we did say that we were going to do it before the 31st. And right now, the real debate is: does the 31st make any sense? It's basically probably going to be there's probably going to be a lull in volumes from the employment from just the side, the logistics side. A lot of guys on our side will be on vacation, so does it make sense to do that in a time when there's not going to be everybody at the helm, and liquidity might be thinner than usual? So that's really the case. That we want to do this as soon as possible. This is not a delay that we like or we want to do. We want to do it as soon as possible because, well, we own a lot of XCM and we want to be able to start using the mechanism to push demand for XCM onto the market. But we need to analyze the best way to do that. So, also from YouTube, we have Matt. What's the logic band showing volume? Oops, sorry. What's the logic from the showing volume behind the liquidity part of the rather than show CoinMetro's volume? It's just, let's say, a band-aid right now because our liquidity engine or our volume engine that calculates basically is taking the volume as it sees it through all the levels of depth. And all the levels of depth that we are actually have on the backside right now are from the liquidity part for the most part. So the system wasn't made in a way so that it can differentiate between the two. But it's a rather easy fix, and it will be fixed. So in the time now, as we're loading on new pairs, we will get rid of that, and we will start to show our true value, and it will be posted publicly on the transparency page and things like that. So the new website's scheduled to come out mid-February. So before that happens, all this will be kind of straightened out. So it really just was an oversight. We didn't really think about this when we built the engine that shows the volumes. Question from CoinMetro fan reloaded: why don't offering 100 coins at start? Regulatory. Easy as that. We could just add anything we wanted, but it would leave us open to risk. And on top of the risk, it's also, I know everybody wants to run fast. Everybody wants to get their products out as fast as they can. Everybody's running. This market is still at zero. There's lots and lots of time to refine this and make it right. You could roll out into the market. When the market was at -5, you could roll out in the market with complete shit and still gain market share. And right now that's somewhat still true, but I would rather take the time. Look, we have 15,000 people inside that Telegram group that have the ability to test things for us. And that's valuable, right? And so that's why we have them there. And we want to put them to work. So it's about understanding to make sure that we get all the glitches out. I don't want to see any glitches. If we go offline right now, if there's some website issue right now, it's much less meaningful than if we throw 100 tokens on there, do a bunch of marketing, get 400,000 clients, and then that happens. So we want to stress test in parallel, and we also want to see real-world tests as we grow in a sustained manner until we really open the doors. Will CoinMetro volume be shown somewhere? Yes, it will. Front end on the transparency page once the new website is live, mid-February. Pretty much actually a year ago that I joined CoinMetro on Telegram. A lot has happened. It didn't happen yet in that year. How do you look back on the ride? Well, like everything in hindsight, there's stuff I wish we would have done differently. There's stuff that I think we did correctly. One of the major ones we definitely did correctly was pegging our token value to the euro, even though everybody thought it was silly a year ago. And there's always things you wish you would have done better. But the good thing is that we can look back and make changes as we move forward, right? So sometimes making those changes now are more difficult than making them in the beginning. But it shows you that over time you learn. And as long as you learn from mistakes and you don't get cocky about accomplishments, at the end of the day, you get closer to success, right? So, yeah, it's taught that, you always need to be flexible. And sometimes when you really think you're right, you're wrong. When you really think you're wrong, you're right. So, is there any way to see the actual non-liquidity partner volume from Francis on YouTube? There will be, and we're working on that. So there will be, and it will be on the transparency page on the front end. It'll also show within the platform. So it's something that we're working on. Krispy Kreme minting first week of January. Right now, it's a toss-up between the 31st, as we promised, and sometime between the first and second week of January, or let's say inside of January. When people come back from vacation and things like that. Di, what is CoinMetro? Is it a type of currency to ride in Metro? Nope. I would invite you to go to our website, CoinMetro.com, and read a little bit. And you should be able to figure out quite quickly what we are. Basically, we're an ecosystem that combines traditional financial markets with crypto markets. That's the easiest way, I guess, to describe it. And we have a token, and that token powers our system. It's kind of like a way to access the system and a way that the system actually functions and charges fees. And so the token basically fuels the train, so to speak. Also on YouTube, Mark Leonard, I missed out on the airdrop past ICO as unable to complete the initial KYC. If have to redo KYC, would there be any opportunity for people like me to receive missed tokens? Great work. There will be future ICO airdrops. Maybe not necessarily the direct for XCM. It may have to do with the ETCF platform. It may have to do with the TAM platform. There will be others. So just make sure you get your KYC done, and eventually you'll get touched with an airdrop, whether it's ours or one of the products we're listing, or both. Another guy from YouTube asking, what is crypto market? So it's a market that sells where you can buy and sell digital assets. That's what the crypto market is. Eric Marquez, for U.S. investors, do you have to do KYC again? And would we get out tokens? If you're asked to do your KYC again, meaning that it's rejected, yes, you have to do it again. Will you get your tokens? Yes. Tim, also on YouTube, why not pushing out top 100 tokens? Yeah, I already mentioned why. There's a fine line between trying to get a bunch of users and completely going against regulation, which is a risk I'm not willing to take, because as you're going to see over the next year, 2019 into 2020 as well, doing that is going to cause huge ripples in this market. Huge, yeah, like Donald Trump would say. This guy Deke needs to read a book, I think. Can I use your currency in Amazon or any other stores? It's not a currency, so no, you cannot. Intermillion, can you please show us live the results of the minting poll? Not a summary, but direct link to check. I'll talk to marketing about that. The minting poll won't, depending on how that poll comes out, it doesn't mean that's how we're going to do this. So if everybody wants to wait and one person doesn't, I may decide not to wait, or vice versa. But yeah, I'll ask marketing about that. Why is the top 100 again, I guess, against regulation from Tim on YouTube? Well, the top 100 will include a lot of tokens, some tokens that are probably classified as securities. That would mean we need an MTF license to legally list them in the EU. Outside of that, you're also talking about the fact that these need to be vetted not only by ourselves, but also according to our internal guidelines. Also have to be checked by our banking partners. We go against that, we could lose our banking partner. Volume, we do need volumes. Everybody wants to make money, but we need to make sure we do that in a compliant manner. No, we don't mint currency for the government. We don't mint any type of currency. Really, look at the website. Like, seriously, take like 15 seconds. Stephen Crocker from Facebook. It's awesome seeing feedback from users being taken on board. Fixes are being implemented quickly. It's great to see. Merry Christmas. Yep, we're trying to fix everything we can. Obviously, some of those fixes don't happen right away, and people get a bit upset and frustrated, but we do try to get to as many as we can, as fast as we can. Obviously, we have to prioritize things. So Jesse says, was it 3 edgy 5 me? I don't know what that means, but all right. Tim is also on YouTube. So will we ever see 20 plus tokens, and what do you think when? Yes, we will. MTF licensing will allow us to list tokenized securities, or STOs, as they're inaccurately called by everybody and their grandmother. And that licensing will happen towards the end of 2019, maybe before, maybe towards the middle. All depends on how quick we can push it through. Outside of that, before that happens, we can list tokens that are not classified as securities. And we will start to do that. We will start to do that in Q1 of next year. So we'll have to go through and vet these things. Banking partners will vet them. We will have to take up an opinion for some of them with the EFSA here in Estonia, and then we will list them. So yes, the plan is to basically at some point have a multi-asset platform with not just tokens and coins, also tokenized assets, and also non-tokenized assets like non-tokenized commodities, equities, FX, etc. So there's going to be lots of things to trade over time, but we're going to do it in a manner that is compliant. That's the main point. Tommy on Facebook asking, can I withdraw my token? The token right now is in a virtual state, so no. As soon as we mint those tokens and then allow for distribution, yes. Caveat there, the only reason you'd really want to withdraw the token is to hold it in an external wallet. Because barring that, there's going to be no other official venue to actually sell your token other than our own platform. You can go obviously on like an Ether Delta or some type of decentralized exchange, but more than likely the rate you're going to get there is not going to be the same, and the amount of liquidity that you'll see is not going to be the same that you'll see on our own platform, because we are constantly buying back our own tokens because we're paid our fees in those tokens. All right, hold on. We got a lot of things coming in here on YouTube. I'm trying to catch up. So lots of trolls. Pedro's talking about on YouTube. Yeah. So when do you think, when the big announcement of the live exchange? It's coming. We got some work going on the Go dashboard, which I think is coming to a heed. But it's coming. It's coming soon. Jesse also on YouTube. It's an internet way to say that Idol is a 9-year-old trying to troll, but is not funny. Okay. Thanks, Jesse, for the explaining to this old bald guy what the hell you wrote. I appreciate that. So he's coming back and he's saying, oh, hold on, we got another one here. Okay. So you don't mint currency, not manufacture kryptonium. What do you sell? We don't sell anything, actually. We provide a service. So again, CoinMetro.com, my friend. If you can type, I'm sure you can read, and it should take you about 25 seconds to figure out more or less what we do. So go have at it. Eric, do you know how by when we would be able to trade CoinMetro tokens on your platform for, say, Bitcoin or Ethereum? As soon as they're minted. So again, we're looking at either the 31st, which more than likely won't be the date, at least in my mind. It doesn't seem like it makes any sense, at least just given the fact that it's the holidays. So probably sometime in January, first, second week looks promising. Could be third week, all depends. But more than likely in January. As soon as the token's minted, you'll be able to trade it. So once you see tradable pairs with XCM inside of them, that means your tokens are now tradable. All right, about 2 minutes away from the top of the hour, guys. So if you have any questions, make sure you shoot them in so that I can get to them before I decide to sign off here. When will ETH be available? ETH will be the next pairing that we set up. ETH Euro will be the next pairing. I have to talk to our tech guys about that, our developers, but I do think we're close. I would say within the week we should probably see Ether. So hopefully, now we do have some holidays coming up, so a week meaning 5 business days may not mean by next Friday, but we'll see. I will be here next Friday to do an AMA, so I'll follow up with you then and let you know where the status is, or maybe it'll already be there. We'll see. Eric on YouTube, after the trading pairs are available, would we be able to withdraw? All depends if we go hand in hand with minting and distribution. So if you mean withdraw the token off the platform, again, the only reason you really would want to do that is because you want to hold it in an offline wallet, I guess, because you really can't negotiate them anywhere else. You can't really sell them anywhere else. Again, you can go on a decentralized market, but more than likely minting and distribution would happen right at the same time. So more than likely the answer to that question is yes. Matt saying hello. I don't know, Matt, if maybe you asked a question. Maybe I missed it somewhere in there. If you did, ask again, and I'll answer it. Gabby on YouTube. Sorry if you answered this already, but in what time frame can we expect, let's say, 15 plus players added? Well, 15 pairs will probably happen more or less within listing the top 5 crypto assets that we have planned to add, because you're talking about multiple fiat crosses and then multiple crypto crosses. So we'll probably get close to that 15, and that should happen within the month of January. Outside of that, to list tokens and other assets that may be classified as securities, that's going to have to wait until we have an MTF license. Tokens and other assets that aren't classified as securities, we will take them on one by one on a one-by-one basis, vetting them and vetting them through our banking partner as well. So it's going to be an ongoing process. I think if we can get 1 to 2 a week done, let's say starting in February, we're probably on a good clip. How much volume has CM done? Volumes have been very minimal up to this point. I don't have an exact number right now, but they've been minimal. So it's been minimal volume so far. Eric Marquez, last question. Once coin is minted, would we be able to deposit, withdraw BTC? You can deposit and withdraw BTC now. So it has nothing to do with the token being minted. Okay, guys, it's we're 1 hour and 1 minute in. So I'm going to call it a day. Well, I'm not calling it a day. I still got stuff to do, but I'm going to call it an AMA day and jump off. I appreciate you guys being here. I did say in the beginning that once we actually launch the platform, these would stop. I don't think they're going to stop. I think we're going to change a bit the format. We might start doing a half an hour, and it might be more like, let's say, the news curation and then general discussion about crypto with maybe a slight bit of AMA without the Reddit questions. So this way we have a bit more, talk a bit more about crypto overall rather than just CoinMetro. I think that's maybe how we'll move on. Ah, the hat. Yes. Okay. So here is the. Let's see. Let me see. I look at myself in this awesome hat. So yeah, there's the hat. Yeah, don't ask me about the origin of this hat because not really sure, to be quite honest. But it came up in conversation. I was supposed to wear a hat. I thought it was a Santa hat. This might be Santa's hat. To be honest. Think about it, guys. Like if Santa was, let's say, came about today, and somebody told you, hey, there's this guy now that's at the mall, and you can bring your young children to sit on his lap, and then he brings them presents at night when everybody's sleeping. I think he'd probably be a bit freaked out and call him, maybe a fucking criminal. I don't know. So maybe this is like a modern Santa hat. But anyway, this was the hat. So yeah, not a self-describing hat. But a hat nonetheless. So, yeah, the commercial. I think lots of sides of Santa Claus, if he were envisioned today, would be quite criminal, actually, from many aspects. Guy breaks into houses, eats people's cookies, drinks their milk. Nobody can see him. He only comes in at night to like give presents to your kids, and he likes to touch children at malls. I'm pretty sure all that stuff adds up to something quite criminal, actually. Yeah, we'll take it off before I run into any meetings, for sure. All right, guys, so me and the hat are signing off. Appreciate you guys being here. Spend some time with friends and family. It is the holiday season. Have some eggnog. If anybody out there doing rain dances for Ethereum, keep on rain dancing. Let's push it up a bit more. Then we'll see each other next week. I'll jump into Telegram at some point this weekend. Wish everybody a happy holiday. And thanks, guys, for being here. Thanks for the questions. See you guys next week.